What's up, Brohim? I wanted to start making these videos just so I can kind of use this as a trading journal, but also teaching you a little bit about trading. So this is the 2-minute chart. It kind of looks very familiar to what I was showing you yesterday with Village Farms, but Village Farms was on a daily chart. So all the EMAs are the same. This is a 9 EMA. So the little light blue one is a 9 EMA. The bright or the dark blue is a 50 EMA. Purple is 100 EMA, and yellow is a 200 EMA. So all that is the moving averages basically are the exponential moving average of the last 9 bars for the light blue, 50 bars for the dark blue, and 100 bars for the purple. And that's in each of these candlesticks, or bars is what I'm calling them, are 2 minutes on this chart. And you can change it to, like right here, I'm going to go to a daily chart and see how it changes drastically on a daily chart of the Nasdaq. But you can see we're just continuing to go above all of our moving averages. So anywho, basically what I'm trying to say is my chart setup you can use on any time frame. So just a little quick review yesterday. So this is all the overnight session, and then here we have yesterday. It was just a really crappy flat day that wasn't really going anywhere or doing anything. Kind of reminds you of Village Farms over the last 6 months. And so all I was trying to do yesterday was basically this sell-off here should have signified, okay, we have some strength in the market to the downward side. And then what I should have done is sold off of this EMA here. I could have entered right off the EMA at 18,586 and taken profit all the way down here at the level of 18,535. So that's a 20-point move. That's not quite $500 on one contract, but that would have been $400. So you can just see how it's just not moving at all. And one thing I wanted to point out too is this is what's called a stock RSI indicator. And basically this indicator kind of helps you to distinguish strength in the market. And so bottom right here is strength to the downside, and the top is strength to the upside. Does that make sense? I know you can't answer me, but I'm just talking like I normally would. So anyway, for example, you had this really long downward swing that showed strength in the market to the downside, and it reached, this is where sellers are getting into it, right? And so you had this little upswing, and you can see correlation here that you had an upward trend there. Kind of matches, I need a line here too, it matches this uptrend, right? Okay, and then it switched over. You had a downtrend and you had a little bit of a downtrend. And one thing to point out here is you had a low that reached down into this lower range on the stock indicator, but it was a higher low up here, which could tell you that the market would go a little bit higher, which it would tell you that it bounced off, or it would hit this 200 EMA, which is on a down day that has some strength, where the what do you call it, the precedence is to the downside, would have been right there to take a trade. So you could have taken that trade down, and the indicator's not really telling you anything other than right here you have strength to the upside is pretty weak because it's low here, so the strength to the upside just is non-existent. And you keep having these touches on the upside, and it's just not going anywhere. So the buyers are not in the market anywhere. But on the flip side, you have strength to the downside here, and then again you have some more strength to the downside, and now it's really going down. So it's showing you that the strength is down. So what I did yesterday to make my money, to make my $3 grand, that I told you about was right here. I took a small little chunk right here to the downside. It broke underneath this level for the first time all day, which tells me strength is in the downside. So then right here off this bounce, this is where it comes down below, retests, and you have two confluences here. So one, you have a bounce off the 9 EMA as the trade line, plus this line indicates a resistance level, or a level of support that's now been broken. So now this is a level of resistance, because the market's going to try and come back up and hit this level, and that's going to be what we do. So anyway, I made money on this downward swing, and that's what I got my $3 grand off of yesterday. So then you have this pretty flat overnight session. It's not really doing anything. Where we go? So we're not really doing anything, right? And then right here you have market open. At 6:30 in the morning. So you had this at 6:30 in the morning. You had this big sell-off first thing in the morning. So in the first half an hour, it had this big sell-off. But this, so now this kind of comes like a level of support right here, because this is the morning low. And then what I did here is I used another tool that's called a Fibonacci retracement. And basically it's a tool that will help you to identify where the market's going to go. And so when I was about right here, I saw this pattern where these three bars were coming down. I actually bought in right here this morning, and then rode this little upswing right up here. And based on my quick scalp method, this was like $1,500 right here. Not too bad. But it just kind of stayed here. So what I did is I did what's called a Fibonacci retracement. From here, the morning low. I'm sorry, I did it from here. Let me delete this. Fibonacci retracement right here to the top of this bar. And that was my morning session. Okay. So anyway, as long as this Fibonacci does not go below this one line, the Fibonacci stays valid. And so anyway, these lines basically say if the market's going to retrace down to these levels, it's going to correlate to the matching levels below it. So what you're trying to do is find a low point and a high point. So if this is all you saw, because that's about when you got into the market, was right here at 7:30 into the morning. So this would be your Fibonacci of going, here's your morning low and here's a swing high. So then, like I said, I bought in right here, right off the 0.5 line, and you could have ridden it up to the 0 line, because the probability is high that it will retrace back to this point at minimum. So you buy in here at 18,406 and then ride it up to 18,435, and there you go. It hit 18,435 and then it swung back low. But my guess is that the market's not going to be done yet. It's going to go down to at least to the 618 or the 0.786 as a retracement, and then it should go even higher up to this line is what I'm looking for. And then here's what the market does all freaking day. It just doesn't go anywhere. Oh, it finally hit the 786 line right there. So you could have taken this trade down here and ridden it back up to, so the green line correlates with this green line. So if it hits this green line, it should hit this one. And it just bounces around, comes back and actually retests right here. And it still bounces around, bouncing around, and then finally comes up, and there you go. It hit right here. So you could have taken this trade, it didn't work out, gotten out of it, so you would have had a little bit of some profit, come back, hit again, take the trade here, and move it back up to the green line. And here you have your 9 EMA crossing over your blue one, or your 50. So that's telling you that you have some upward momentum. And also right here in the stock indicator, so you have, so this is the strength of the market coming down, hit right here, right? And then you have strength coming up. It tries to come back down, but the strength isn't there, back to the downside. And you have strength to the upside again, and notice, yes, these are just showing strength because it's outside of the interior range, but this high is here, and then this high is there. So it's telling me because this higher is higher than this one, there's strength in the market. And what's happening is why this is simply dropping back down is it's just seeing if the sellers or the buyers are there. So it's just picking up more buyers right here to take it to the upside. Not enough buyers yet. It's going to come back down, going to pick up some more buyers right here. So people are just buying in the market to take it up. So that's what I was looking at all day today, going, okay, it's going to be, there's going to come a point when the buyers are really going to come into it. But because of this huge downswing, you still kind of have to have the thought process that sellers may be in control, but it's just not showing any further selling because it's just not going anywhere to the downside. So, but off the 200 EMA, when it comes up to test the 200 EMA, I'm always from now on going to take a trade off of that, at least try and get 25 points out of it. So anyway, if you bought here, you take profit of this green line, and then it's just sitting here staying up above. So once again, you have a break to the downside right here, trying to show strength to the downside, but this downside indicator is now even higher over here. So the sellers can't push it down any further. Buyers are holding on to it, keeping it up high. So then it's just bouncing around, not doing anything, just driving me nuts. It's going to keep playing around this little area. And then finally, it goes up and hits the 200 EMA. Right here, take a sell right off the 200 EMA and try and ride it back down to the downside. And sure enough, it goes to the downside. It kind of hits this area again where these two touches are. And this is what drove me nuts here, is because I knew better than to do this. So then I kept trying to buy it back up. And it just wasn't working because the strength was there to the downside. But one thing I want to point out, it's kind of hard to see, but you have this downtrend here. Let me just draw a line. You have this downtrend. But on the stock indicator, you have this uptrend. When you have a downtrend in the actual chart and an uptrend in the stock RSI indicator, that's called divergence, and that's an indication that yes, it's going to go down, but it's going to reverse back up. So right here would have been the optimal buying point. Let's see here. Got my tools. Take the magnet off. So right here is where you want to buy. Right in here somewhere. Buy it right there, and then just ride it for the long haul. And what I was trying to tell you earlier is that where is it? Oh, my deal got all messed up. Where's my magnet? Sorry. Long video. There we go. So anyway, buy it right there, and look at this killer freaking move that it did up to the upside. And this is started at 12.20 pretty much. So you had a lot of the sellers trying to sell it to the downside, but the buyers were in control, so it wasn't going to get any lower than this, and the buyers just took off with it, and to the upside it went. I failed another account in here because I was trying to buy it up instead of just letting it come back down here, and then I passed another account $3,400 on this big move. $3,400 in a half an hour before the market closes at 1 o'clock, which is right up here. So hopefully this helps. We'll see how it goes from here, and I'll keep making these videos. Love you, dude.